Lena, by the way, whenever Kev says keep that in there, that doesn't always mean to keep it always in there.
Why are you worried?
The last time I was like, that should have been fucking edited out.
No
Like,
way! It's so good when we keep them in there.
Oh,
It depends. It's at your editor's discretion.
Yeah.
oh my God.
That's why you got to be nice to her.
All right.
That's
It's true.
right.
Fuck, you're right. Okay, here we go.
Hit it.
It's Friday, May 27, 2022, episode 181. I'm Patrick Serezna.
And I'm Kevin Muir. This week we have the great privilege of having our Marko. Oh, I fucked this up already.
Keep that in there then.
Yeah,
No,
just keep it in there. That's fine. Let's try this again.
No.
This week we have the great privilege of having Marko Papic from ClockTower Group back on the show. We have a great discussion about the war in Ukraine, the situation in China, and he gives us a whisper in the dark trade that some of the biggest, smartest traders are putting on their radar. Then our favorite crayon chewer lets us know what he sees on the horizon for the stock market and answers the question, was that a bottom or just a point where his crayon broke and left behind a weird mark on the chart?
This week, we're doing a shortened segment, so you have to wait till next week to get the segments of No Stupid Questions and Skin in the Game. But folks, we might drink some beers along the way, so stick around. We got a great show. Lena, hop on. Let's start with what beer am I drinking this week?
So this week, Patrick is drinking War Brewing Company's Franco Keller Pilsner.
That's right, and it's an Italian beer, and I'm out here in Florence, Italy, and I saw this, and it has a logo of a monkey wearing a hat that says war, and I just thought, with they obviously made this beer long before current geopolitical stuff going on, but with monkeypox and geopolitics, I thought this was an appropriate beer to feature on the show. So let me give this a try here.
So it says here, it was a very long description, and it was in Italian, so I had to Google translate it.
Okay, so let's hear the worst part.
But the gist of it is, it debuts on the nose with a complex yet extremely refreshing bouquet, which brings to mind summer climates and Mediterranean and tropical landscape.
That's exactly what I was thinking when I was.
It says it's got a lot of fruity notes.
See, even when the Italians write something that we translate, it still sounds beautiful.
Right?
Yeah, it just kind of rolls off the tongue.
And you know what? I could not find a place that has pineapple on the pizza. I've been looking.
Oh, that's a shock.
They're probably looking at you like you're crazy.
Well, I haven't asked. I haven't had the kahunas to ask.
You got to ask.
Simply, I've been going in and just looking at the pizzas, because if there was one place serving it, I was going to take a photo and
send it to Macro Alf.
Exactly. But you know what? Can't find it. I've been in 3 cities now.
I dare you to ask
I want to see if you get
They'll
kicked.
probably tell you to get out.
I was wanting to see if you can get yourself kicked out by asking for pineapple on the pizza.
All right.
Okay, we have to talk a little bit before we do this. We have to talk about the Piss Up that's coming next week, because this is the last time before the Piss Up occurs. Just to reiterate, it is June 1st, which is a Wednesday. It will start at 4:30 or 4:15. We're going to head out there. It's at the Bottom Line, which is at 22 Front Street, East, I guess, in Toronto. West. No, you're absolutely right. It's West. I almost messed it up there.
It's by the Hockey Hall of Fame.
Right beside the Hockey Hall of Fame. Very fitting. There is a courtyard in between the 2 towers that the Bottom Line has. We're taking it over. We're gonna tally up the official amount of pitchers that we've lost, Patrick and I, and basically
we rounded it.
We're gonna, it's around 50 at least, and we're just gonna pre-buy 50 pitchers. And
they don't have pitchers, right? So we're doing.
Well, yeah, we'll figure
beers.
it out. We'll figure out how many beers equivalent. But in essence, we are going to pre-buy that amount of beers, and we're looking for some help to drink them. One of my good buddies, Marcel, he had a great line the other day. He said, "This is going to end badly." He says, "We're all going to be short Boons and Tesla before 7 o'clock." I don't disagree. It's going to be a lot of fun, though. Come help us drink our wagers that we did for Skin in the Game. We're going to need some help. It is, again, 22 Front Street, June 1st. No reservations, nothing required. Just show up and drink some beers with us. We have no clue how many people it's going to be, but it is going to be fun regardless, and we're looking forward to seeing you there.
And if you show up in the official Market Huddle menswear, you're going to drink for free for the rest of the night.
Is that true?
Oh.
I'm not going to put the picture up now because longtime listeners know what that
That's a bold
official
call.
Market Huddle menswear is. But if you show up in the Market Huddle menswear, the official Market Huddle menswear, you will drink for
Did you
free
check
for
with
the rest
management?
of the
Courtesy of
night.
Big Picture Trading.
Yeah, did
Oh,
you,
yes.
you checked with management before you made this
Oh,
bold
yes.
statement?
This was their idea.
Oh, it was. Wow. Well, that's I might have to do that then.
No, no, you have insider information. You can't do that. All right.
All right.
Why
Okay.
don't you give us some side effects, bud?
Nothing in this podcast should be viewed as investment advice. Listeners should consult an investment professional before making any decisions regarding topics mentioned in the show. Side effects of too much huddle may include the crayon munchies, the micro infidelity, and the hairline time decay, which is what I'm suffering from big time. Thanks, Rad, for those great side effects.
All right. Let's get to Marko.
It's our great pleasure to welcome back to the show my favorite geopolitical strategist, Marko Papic, who's actually the chief strategist at ClockTower Group. Marko, thank you for making time for us.
Absolutely. Anytime, Kevin. It's a pleasure. Thank you.
And one of the reasons that I call you my favorite geopolitical strategist is because geopolitics is filled with all sorts of doomsday type analysis, and you seem to be the opposite. And I thought we'd start off with a story of your time on the sell side when you experienced that pressure to create that kind of doomsday reports.
Yeah. So I started at BCA Research, a great Canadian company based in Montreal since 1949. Taught me everything I know about macro, and started there in 2011. And there were a lot of scary things in 2011. If you remember, Kevin, there was the collapse of the euro area that cannot possibly stay together. There was the Arab Spring that was picking up steam. There was, by the way, Arab Spring that was supposed to bring oil prices to the moon, right?
Yep.
And there was the default of the U.S. government.
Oh, yeah, I forgot that one.
There's a lot. And, I did my work. I rolled up my sleeves. I locked myself in my little office, and I came out and I said, no, everything's good. Especially the euro area. That thing is not collapsing. Like, no way. So anyways, I went on the road. I pitched those views, blah, blah, blah. And then one older gentleman who taught me a lot in my career, a lot. He came into my office, closed the door, and he said, listen, young'un, here's the truth, okay? You're too bullish. You need to be a little bit more bearish. And you need to think of something, okay, right now. You need to spend some time. Spend the next couple of weeks thinking of something that's going to scare the shit out of everyone, And I was like a naive, what was I, 2011? I was like 29-year-old, I was like, but that's not my view, he's like, don't you worry about your view. So anyways, that's when I went to the drawing board, and, I went back to my academic work in political science theory and John Mersheimer and all these folks. And I was like, okay, cool. You want me to scare you? All right, how about World War III? U.S. and China are going to hate each other in 10 years. There you go. And then that was it. And honestly, he was right. I think my sales went up.
Well, Marko, I always laugh because I have my favorite anecdote about geopolitical strategists is there's a very famous one who worked. I might as well just out him because I've said so many things over the years about him that I'm not going to be able to go back at this point. But George Friedman.
Yes, my boss. He was my boss. Yeah.
At Stratfor.
Yes.
And I always like to send people pictures of his book that he wrote.
Oh, yes. Oh, no, you're so mean. Kevin, you're so mean.
It's the coming war with Japan, and I'm still waiting for it.
Listen. Here's what I'll say. I learned a lot from George, and methodologically speaking, I started as an intern at Stratfor. I'll tell you, I was doing my PhD in political science at the University of Texas, and I realized I wasn't going to do well in academia, because I remember I published a academic paper on the 2002 Ukrainian elections. In 2012, it got published 10 years later. I was like, who's going to read this thing? So anyways,
wow.
I crossed the street, went to Stratfor, which was there in Austin, and very high-paced, young environment, and like from the first minute, I realized that George and I were like built in the same way in terms of methodology and philosophy, So that's that's why I loved working with him, and we aligned a lot with how we saw the world. Like it's usually what's on the first page is wrong, like as you believe too.
Right.
But the other thing about that is that you got to respect the fact that the man made a call. And that's, I think, the much worse thing about geopolitical strategists is not when they make a wrong call like that, and that was spectacularly wrong.
I have another one if you want to know, but
Yeah, I do. But wait,
Oh.
what I will say is the worst thing is when you replace two-handed economists with two-handed geopolitical strategists.
Well, that's true. You're absolutely right.
Right?
But in terms of Friedman, his other one that really would push me over the edge with him was I saw him go to that Kotak fishing summer retreat that they all go on, and he got on CNBC, and this is at the time that Bernanke was up for reappointment by, I guess, Obama, and George got on there and he said, there is no way Obama is going to reconfirm Bernanke. And he went through all the reasons, but he was so firm with it. I was like, oh, he must know. He's telling us these reasons, but he actually must know. And so I positioned myself for this, and I assumed that here comes the news. This was a famous geopolitical strategist signaling to me that they knew more than than he was kind of hinting at. And no, he was just spectacularly wrong again.
Yeah, I mean, that I will say this. I don't know why George would be speaking about monetary policy. That's not his bailiwick, but yeah.
Well, it didn't stop him from wandering in there. Okay, so
let's wander into something, Kevin.
Right. So let's go get ourselves into trouble by saying something stupid. Let's talk about Ukraine. Just let's get an update on this and just what you're thinking. It went from being the only issue that the market would focus on to something that seems to be forgotten. I was wondering what you feel. Was the market right to forget about it, and is that going to continue?
Absolutely, it's right to forget about it. But I would say that oil markets haven't yet forgotten about it. So if there's a pocket in the markets where there is geopolitical alpha to be harvested, I think, and I hesitate here, Kevin, because everyone I speak to in the macro community is probably on the other side of this trade. But I think the oil prices still have to come down from the levels that were boosted by the conflict in Ukraine. So I think the market's not wrong. My framework here was that invading Ukraine would be spectacularly stupid, and therefore I assigned a really high probability to Vladimir Putin not being stupid. And so I assigned 50% probability, which is kind of being a two-handed geopolitical strategist. But whatever, I assigned a high probability to this being a bluff. As did a lot of people inside Russia that I spoke to, a lot of Russia experts. A lot of people were wrong. Blinken was right.
100%. It was almost everyone was in terms of in the geopolitical community thought that there was very low chance that he was actually going to go.
Well, I thought there was a decent chance. So the other 50 was distributed amongst different scenarios for how they would attack. But trying to take Kiev and trying to replace Ukrainian government with a puppet Russian regime, I dismiss that as lunacy because, and this is where I was right, everything that had happened since they crossed the border was in line with my thinking. And so I have a dear friend, Dave Abramson. He works for Alpine Macro, another fellow Canuck. He wrote me this beautiful email to me. He was like, Marko, you were so spectacularly right about what would happen if Russia invaded Ukraine. And Vladimir Putin was so spectacularly wrong. The only problem is you write investment research on a beach, and he's the president of the Russian Federation,
He should have listened to you. He wasn't reading your research.
He wasn't, but hey, listen, if he wants to buy, I'll give him a good price. But the funny thing about that is that, so the constraint framework that I really always tell investors, look, just focus on the material reality. It did ultimately work. It's just that it took some time for the Russian policymakers to realize that they truly were indeed constrained by the size of Ukraine, their incompetency, their poor military readiness, their equipment, the demographics of Ukraine, the fact that nobody wants to be pro-Russian, blah, 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 blah. There's all these factors that, you can outline for why what happened. And the reason the market is starting to ignore it, I think, are two reasons. One, the conflict is migrating from northern Ukraine, where it's a conflict of one state trying to annex, swallow, Anschluss another. And that conflict, by the way, is pretty near NATO borders like Poland. And the Poles are out there salivating, waiting for the Russians to do something stupid, like a Sukhoi that turns on afterburners above Kiev and wanders into Polish airspace is getting shot down. I can guarantee you that. Like that was something that was happening when they were after Kiev. Now it's migrated geographically to a part of Ukraine nobody cares about. Like there was a war in Donbass for 8 years, and we as investors have ignored it. So Donbass is a part of Ukraine that you can have a pretty significant conflict in, and the market can ignore it. Now, obviously, by the way, just a caveat for everyone listening to this before I get canceled is that I purely and only analyze geopolitics for the markets. So I'm not speaking about the human costs and the geopolitical, necessarily political, like evolution of what happens. But from a market's perspective, like a war in Donbass is a non-event. And also, there's no natural like resource implications of Donbass. Like this is a place that produces coal. I see this nonsense on Twitter about like, what was it? Neon gas, please. Like you and I could make neon gas in the kitchen. Like relax, okay? Like there's just so much bullshit out there about like Ukrainian natural resources. There's only one, softs, and that makes sense for the appreciation in like wheat and corn. Everything else. Ukraine doesn't have any natural gas, for God's sakes. I've even seen that nonsense out there. It's like, what are you talking about? They're a huge importer. Shale resources. No, just forget it. Okay, this is purely a power play by Russia. It's about domestic politics in Russia, and as far as Putin is concerned, Donbass is now the target. The second reason that I think the market is correct to put this on the back burner is because what did Russian policymakers do when those material constraints revealed themselves? And I was told with high conviction view by a lot of people who go to cocktail parties for a living. Let me say that again. A lot of people who go to the DC cocktail party circuit for a living, and they regurgitate it to you for a nice six-figure price. Yeah. Those people told me that I got the initial invasion wrong. Therefore, I will get the second step wrong, which is when Russians do meet my material constraints, they'll go crazy. They'll use tactical nukes. They'll use chemical and biological weapons. They will, sow the seed, the fields with salt, as the Romans did to Carthage. And it's like, well, that didn't happen. In fact, when the Russians met their material constraints in northern Ukraine, they adjusted their expectations and what they consider a victory in order to allow themselves to raise the mission accomplished banner, with relatively quickly. And I think I'm maybe the only person on this war will end faster than you think corner. Like I'm on that corner, I have a beer in my hand, and I'm just waiting. I got the lawn chair out, and I'm alone, but I'm on that corner.
And Marko, you were nice enough to invite me to one of your events, and by the way, which I can't figure out why I'm ever invited. There's all these fancy guys around, and then there's the macro tourists sitting in the corner with all these people that manage billions of dollars, and I'm sitting there, wondering why if somehow you missed.
Come on, Kevin, wait, come on, man! It's not billions, it's trillions. It's trillions.
But a month ago, I guess you were in town and you had one of these, and you said that you highlighted this view, and it was really important for me because not only did you say that the Russians would reach this material constraint and back off, you also said at the time that it had already started, and this was a signal that Putin was acting rationally. And I think that was so important. And why don't you just to walk us through what you meant by that and why that was? And I think from then on, the market has almost forgotten about Ukraine.
Well, I mean, I think what happened in northern Ukraine, what happened in Ukraine in general was just one of the most fascinating moments in military history. Russians invaded Ukraine from 14 different directions, which is one of the most idiotic things I've ever seen in my career following military invasions. Now, that career is not long. That's not my main hat. I wandered into this like a child wandering into a conversation, but I had some training at Stratfor. I did follow several military invasions before in my past. Also, I'm Serbian, and I watched NATO bomb my country as a kid, and so I've thought about this a lot in my life. And so the first day when the Russians went in, and they went in with helicopter gunships, and transport helicopters to take some positions, you knew they were nuts. You know, it was like, what are you doing? America doesn't fly a helicopter into enemy territory for weeks, if not months. It softens the air defenses. It uses what's called, SAD operations, suppression of enemy air defenses. And this takes a long time. You have to fly 30,000 feet. You have to shoot down the radars with HARM missiles, anti-radiation missiles. This is a process and by the way, this is not like the American process. It is the process. It's a playbook you should have when you invade a country with as sophisticated of an air defense system as Ukraine. Russians were like, screw it, we got this. They came in 14 directions. And the 14 direction thing is important because also the other thing Americans have proven is if you want to take out a country, you go in for the capital, you take it, done, seize it, forget everything else. When Americans went into Iraq, for example, Iraqi troops were positioned along many cities on the path to Baghdad from Kuwait. Americans ignored them. And by the way, that's very well documented in that book, Generation Kill, which was turned into a wonderful HBO mockumentary also by the same name. So the point is, Russians just ignored all of this. First hour that I had information about the conflict, I wrote up a piece saying they're going to get their asses kicked. I thought so before they invaded. Now I know for a fact that this is going to be a freaking carnage. Now, what Putin could have done is he could have said, well, screw you, Marko. I'm going to triple down on this, and I'm going to put even more troops into Kiev. I'm going to use a tactical nuke to attack the part of Kiev where the administration sits. There's all sorts of things that he could have done, and he didn't. Instead, the defense ministry came out, I think it was end of March, I forgot now when, but the defense ministry of Russia came out and said, we won! It was just, and this was, by the way, I kept telling my clients, like, look, what they're going to say at some point is that they demilitarized Ukraine successfully. Because I remember NATO said that about Serbia, which was totally false.
Right.
Like NATO was bombing Serbia from 30,000 feet, and so they destroyed all sorts of infrastructure, and then they claimed they destroyed tanks, and then the NATO forensic teams went into Kosovo and found 4 tanks destroyed and about 100 Yugos with a tree trunk stuck in it. Because from 30,000 feet, a little tiny Yugo with a tree stuck in it looks like a freaking tank. So the Americans were like, oh my God, we hit like 300 tanks. It's like, no, you got 4. But it doesn't matter because these things are in the eye of the beholder. And so what Russia said was simply, yeah, we got it. We won. Oh, you guys thought we were going to take Kiev? Oh, what? No way, man. You guys are so stupid. Like, psych, we didn't. That was just to distract you from our real goal, which is to conquer the West Virginia of Ukraine, of Europe, which is Donbass, because it's so critically, vitally important to us, which is nonsense. Obviously, this is all nonsense. They're just adjusting what their goals are, not because those are actual national security goals of Russia. And this is the problem with a lot of academics that are following this conflict. They think that Russia is actually operating rationally. They're doing this for domestic reasons. Like, this is typical face-saving stuff. Like, oh, no, like, we weren't going to, like, denazify all of Ukraine, just Mariupol. Just the Azov steelworks. That's where the Nazis really are. Right. And now they're going to basically proclaim victory, raise the mission accomplished banner as soon as Donetsk is conquered. Luhansk is totally conquered, Kevin, if you look at the updated maps. Donetsk still isn't. Once both of those are controlled by Russia, I predict this war is over.
Okay, and so the stock market and the rest of the capital markets, you think, have correctly forgotten about it and not worried about it, or at least diminished the importance of it, but yet you think that the oil market might still be missing something.
So let's talk about this. Yeah, let's talk about this. Like, could you competently say that the equity market ever cared about Ukraine?
I think that the equity market cared if they were worried about the West getting dragged into a war. And once it became clear that the West would not be dragged into a war, the equity market stopped worrying about it.
See, I don't know. And I would take the other side of that probably. Maybe, what? I'll take a hyperbolic other side of that just for the fun. Okay. And here's why. I've done a lot of quantitative work on geopolitical safe havens and my time at BCA Research. That's something I was expected to do, and I don't know how to do math, so I had really smart people help me to do this. But it's pretty clear that the U.S. 10-year Treasury note is one of the best geopolitical safe haven assets. And at the height of the thermonuclear war hysteria, which was really very quickly, like after the invasion. The 10-year went from 2 to 1.7%. And then it just went on its kind of trajectory towards 3, ignoring what was happening.
But can I just push back real quick on that? I think that the problem is that we are at a secular turning point in terms of inflation, the way we think about bonds, and therefore you shouldn't be using the 10-year. And I would argue you almost should be looking at relative equity allocation of the U.S. versus the rest of the world. And I think that almost every equity manager that was able to move it around sold their European assets, sold their Japanese, and bought U.S.
So I don't disagree with you, but there's a couple of things with that. That literally happened on January 4th, Kevin, right? So like this secular like realization of where inflation is started on January 4th. People came back from New Year's. They realized Omicron was a joke, and the bond market started selling off. And like I know this to the day because I've been waiting for this secular turnaround because
you and me both, buddy. You and me both.
I know, and I read your stuff, and I know we're both sitting there in 2021, like what the hell, And here's what I'm getting at. What I'm getting at is that I hear you, I agree with you, obviously, and the fact that the bond market sold off in the face of thermonuclear war probability, which I think is 0, but whatever, like people didn't. That to me is a sign that you are right and we're in a profoundly bond bearish environment. But my point is, you can't tell me that the entire investment community from January 4th to the end of February just like is 100% certain that you should sell bonds in the face of thermonuclear war. And so what I'm getting at is that I think the market sniffed this out very quickly, and that we are in a profoundly bond bearish environment as well. On top of that, I think that was like as the yield started to rise, I think that further deepened the correction in the U.S., especially in the tech stocks. So I would give you a counterfactual here, Kev, and I would have said if Ukraine had brought yields lower, maybe we wouldn't have had the equity correction. In other words, I think that the equity correction required the market to ignore Ukraine as a global risk to macro factors, which is, again, I know I'm the only person on this island, but just like Delta and Omicron, remember, Omicron gave us a nice little December rally. I know, because it melted my face. I turned bearish in November. I was ready to go on vacation, being a bear. And then December, like, rips my face off because of Omicron. Like, Delta, Omicron were both very good for tech stocks and for the U.S. market. Ukraine could have done the same thing had it actually been a risk that kept yields lower, but it didn't.
And Marko, and this is why I love you, because basically what you're arguing is that the geopolitical aspect of Ukraine matters a whole lot less than things like U.S. economic activity. And I'm with you 100%.
My book's first chapter is about how little geopolitics matters for the markets in this kind of like a tactical. There's a story in that book where I'm asked. One
second. Before you tell the story, I'll just say I read the first chapter and then I just stopped because I agree with you.
Yeah. What do I need the rest of this book for? Well, yeah, that's right. Well, I'll tell you what you need the rest of the book for. This profoundly secularly bond bearish environment is a product of politics.
Okay.
Yeah, that's what I would say. I would say that like it's much more like geopolitical alpha is a funny title because I think there's maybe 2 or 3 times a year when you can really generate geopolitical alpha, and we can talk about oil prices. I think that's one.
Okay. So what do you do?
But it's really geopolitical beta is, I think, where you can add more value, which is like figuring out where the pendulum is swinging politically. That does produce a profoundly bond bearish environment.
Okay. So let's jump into those two, but let's start with oil. Tell us why you think oil might be a sale, because you are probably one of the few that is willing to start saying anything bearish about oil.
Yeah, look, I've been bullish oil since end of 2020. I've been a huge bond bear since end of 2020 and a huge commodity bull since end of 2020. But I do think that there's a pocket. And I say that 3 times because I've been already yelled at by many of my readers who are so mad at me for pivoting from my bond bearishness and commodity bullishness. And merely see this as a tactical play. But what I like about it is it could become cyclical if we do get a recession. So I want to be bond bullish and commodity bearish. And the reason for that is that China is absolutely coming at the seams. I mean, the data we're getting out of China, and we have a Shanghai office. I have a great colleague there in Shanghai, Kai Wang, who is my second in command, and he writes a lot of our China stuff. He's never been as bearish as he is. It's like a 30-year destruction. I mean, it's the worst it's been in 30 years. And if you look at Chinese imports, they're falling off a map. Now, correlation of Chinese imports and the 10-year yields, it's pretty nice. It's decent, not great, but it's decent. But it's one-to-one with commodity prices. And so I think right now everyone's doing what's easy, which is counting barrels and inventories. That's what we in finance can do. Any moron can kind of do that. There's some who do it better than others. But the point is that we all know that's bullish, right? We get that. But demand is an art. And I think the demand story could suffer this summer. And if the demand story has a hiccup, if China doesn't stimulate as fast as many people think, and I think there's many impediments for them to competently stimulate, those imports continue to collapse, and Ukraine truly doesn't matter for oil supply and demand, I think that we're poised for oil prices to go back to pre-war levels, which is 95. It's not a crazy forecast. I'm not saying it's like 60. I just think that where we are right now with Brent prices at like 112, 111 seems to me to be imbuing those oil prices with a geopolitical risk premium, which shouldn't be there, because Ukraine-Russia war is not going to impact global oil supply unless, like, the embargo by Europeans doesn't matter, guys. This is like a fungible commodity. Like, someone will buy Russian oil and Europeans will buy something else. I know I'm being simplistic, but give me a break, right? Look, the point is, the only way for this war to impact supply is if Russians show us they have guts and impact their own exports, like OPEC did in 73. And for whatever reason, they've been unwilling to do that. They haven't even hinted at it. So I'm going to assume there's some domestic constraints to them being able to do that. They don't want to do it. They need the money. The oil sector is very powerful. Igor Sechin is a powerful guy. He can stand up to Putin and say, like, hey, man, it's your war. I'm not cutting in my P&L for your war. And there's a technical reason I've been told, like, Russians can't really shut down that much of their production, blah, blah, blah. Look, the point is they haven't done it. And that's why I think that what's happening in China is actually far more important than what's happening geopolitically in Ukraine when it comes to oil prices.
Okay, so if I understand correctly, and I'm pretty sure you're a long-term commodity bull,
100%.
Bond bear, but yet you're looking at it and you're saying, listen, everyone knows about, all the problems in Ukraine and the fact that you need commodities and is all hyped up on the inflation trade. And you're arguing that we're going to get basically a counter trend move that is tradable. Is that correct? Where you both want to be short commodities and long bonds?
Yes. It's a short-term move. And, look, a lot of people who are yelling at me about this and are like, how can you change your view? Like, got onto this view like 3 months ago. I was like, bro, you should have been, like, the time to be a massive commodity bull was end of 2020. Like, I traded XOP. I get it. Like, it was awesome, But now at $120, $115 oil, with the war in Ukraine dissipating from its actual impact on supply, what are we left? We know the inventory situation. We know it. It's in the price. What we don't know is what's going to happen when China slow rolls their stimulus into November.
Okay. And we'll get into China in a second, but let's just talk about the U.S. a little bit. Are you worried about the U.S. economy rolling over faster than expected? And is that part of the reason that you expect bonds to perform better in the coming months?
Yeah, I mean, sure. That's part of the equation, too. I think China's more relevant, actually, for the 10-year yield right now than the U.S. is.
Okay, so your argument is more directed towards the problems in China than it is expecting a slowdown in the U.S.
I do expect a slowdown in the U.S. I expect us to end the year with PMIs in the low 50s. I don't expect there to be a recession, though, in the next 12 months. I think over the next 24 months, sure, it's end of the cycle. I get it. But I don't know. I kind of like what you wrote last, which is this fact that nobody got the 2020 recession right. I was in the maniacally.
You got it pretty close to right, I would argue, and I think there were a few, but most people were quite surprised at how much we rallied coming out of it.
Right, and I think now, yes, goods. Like your point is goods versus services. I agree. I think one problem with the handover between goods and services, which is why we're going to have a slowdown, is that you cannot really binge on services. Like that's one thing. Like goods you can binge. Like I built a whole gym in my garage, so like, and it cost a lot of money. It was like thousands of dollars because those plates were now expensive. And I obviously overdid it. And I broke my back because I'm an idiot, blah, blah, blah. We can talk about this, But the point is services, I can't go on 6 vacations. I can't have my hair cut 3 times a month because now I have more money and I'm like YOLOing. Like, no, you can't do that. And so that's where I think it's going to be tough for the economy. That's why I think a slowdown is going to happen. But I don't think it's necessarily a recession.
Okay, so a slowdown, but now does that mean that you can buy bonds or just buy the front end of the curve? And what is your feeling about bonds? Or it goes nowhere. It's just like something we should avoid because it's neither going to rally nor, sell off, and we'll resume our bearish stance in 6 months to a year.
I'm much more comfortable with just like duration plays, so like the 10-year, and I think that we can go down to 2.5, 2.4%. From these levels. And again, that's like, it's similar to what happened in 2021 when all the deflationistas were like, we told you, nothing's changed. And it's like, no, calm down. It's just Delta, Delta like strain is causing people to get into bonds. And also all these like pension funds are rebalancing because the yield broke 2%, like whatever. We could have that again this summer and I would play that. And I think what's happening in China is really more relevant than the slowdown in the U.S. But sure, both of those combined seem like a pause in a secular run-up of yields higher. Okay,
so you mentioned China a few times, so let's go there. One of the things that you wrote recently is China. It will get worse before it gets better. And one of the other things that you've been talking about is India. And why don't you contrast the different opinions that you have between those two countries?
Yeah, so like the best trade in the world for the last 2 years was long India, short China. Like that was the 100% correct trade. And India is the best performing market in the world since the pandemic, better than the US. I wrote you a long email last year when I poo-pooed all over your India call. I was like, man, Kevin, here's all the reasons why India's going to get crushed. And that, like, hey, you know what? I'm saying it. It was a terrible, terrible call, and you got it right. So then you have the Economist covers, which I know you love. You tweet about them a couple of weeks ago. It's like India is on the ascendancy and China's like going down the escalator. And
like just last night we were tweeting back and forth because the cover of the Economist is how China's in trouble. Yeah. So like, I mean, it is in trouble and it's going to get worse before it gets better. But here's a couple of things. First of all, why is it bad? It's bad because zero COVID policy for sure, but it's also bad because Chinese policymakers, like everybody thinks Xi Jinping's biggest like political issue is COVID. It's not. When he won his second term, which was expected, but he had to work for it from 2012 to 2017, he had to prove himself. And once he got the political capital, what did he do? What was his big thing? Was it South China Sea? Was it this or that or the other? No. It was deleveraging. This is a guy who's like Treasury Secretary Andrew Mellon, right? He's like, he wants debt levels to deflate. He's obsessed with it. A lot of people around him are obsessed with it for good reason. They're looking at Japan as an example of a country that was on the ascendancy. You had famous geopolitical strategists writing coming to war with Japan. and then it didn't do anything for the next 30 years, right? So the Chinese government really built up political credibility with the anti-corruption, with the anti-pollution reforms in 2012 to 2017. And then from 2017 onwards has been trying to deleverage the system. And to do that, they've imposed a lot of different things. But the most important for our conversation today is the accountability rules on local provincials, local leaders of provinces, provincial leaders. What this means is basically, if you're a provincial leader in China, you want to prove yourself and get a job in Beijing, you have like a baseball card. The back of that baseball card are your stats. Like hitting, pitching, whatever, all sorts of stats. One of them is, did you cause a debt explosion in your province? And if you did, you're liable to be put on trial. Like after you retire, you're sitting on, yeah. Oh yeah. After you retire, they'll come at you. If a bridge collapsed
that you built with your developers and killed a bunch of people, or if there's a debt crisis 10 years while you're sitting in your you're sitting on a beach in Hainan Island just drinking a Mai Tai, they're going to come for you and they're going to say you know what, in 2012 you'll let debt levels rise, you're going on trial.
Wow.
Now, yeah, no, Kevin, this is so right now a lot of macro hedge funds I speak to, big hedge funds that you heard of, a lot of them are itching to go in, buy China. And I do think that moment is coming. My only fear is that as long as those accountability rules are in place, it's going to be difficult for local provincial leaders to actually listen to what the Beijing is telling them. This reminds me, by the way, of 2012, 2013, when I was at BCA Research. A lot of people thought stimulus was coming. The problem was we had to wait until 2014. Why? Provincial leaders were so afraid of the anti-corruption campaign, they didn't want to go buy a cup of coffee without a receipt. So they froze. And by the way, all stimulus in China is provincial. That's who executes Beijing's command. There's no nationwide infrastructure spending. It's not that relevant for the macro kind of soup that we're trying to predict. And so we have the same problem now. In fact, Xi Jinping came out. There was a big Bloomberg article that said we're all in on infrastructure spending. And then over the weekend, they put several people on trial for those accountability rules. Those are mixed messages that will freeze provincial leaders and that will delay the stimulus coming. Now, I do think the stimulus is coming. I think it's going to have to get worse before it gets better. And I think that by the end of the year, closer to the Congress, they're going to have to break glass and pull the old school lever. So this is important for the commodity view, for the bond view. See, China from 2002 to 2012 was FAI-led, fixed asset investment led. We all know this. There was a commodity supercycle. And then in 2010, 11, 12, they started being led by private credit, credit to privates, to corporates and households. They switched their stimulus form. My view, high conviction view, it's been my view for 2 years, is that they're pushing on a string. They can no longer cut interest rates. They can no longer do anything because households and corporates are over-leveraged. Household disposable debt as percent of disposable income is larger than, it's higher than in the US. That's a great chart from my former colleague from BCA, Arthur Budagayan. It's a fascinating chart. It's shocking.
Yeah, you would never think that. If you ask someone, what is the percentage of debt to GDP for the consumer, I would have never guessed it was even close.
It's high. It crossed. And it's not. And you might say, yeah, but America's deleveraged. So since 2008 highs, yeah, but China went from nothing to these levels in 10 years, and that's the important thing that people need to understand. Chinese stimulus in the early 2000s was SOE led, infrastructure led, government led. Chinese stimulus from 2011 onwards was private sector led, credit led. And so what I expect to happen is that they're going to try to do what worked last cycle. They're going to find out they're pushing on a string. They're finding that now. They're finding that this instant. And then they're going to say, we need to break glass and pull the SOE infrastructure lever. And that's going to probably happen not in June or July, but probably after their big, whatever, August get together on the beach where they all come together. And then they're going to have the Congress early November. So somewhere between I think late August and early November, I think China panics, pulls the lever. And then you re-engage with commodities and you buy emerging markets, you buy Europe, you buy non-US, you buy non-tech. That's going to be truly the beginning of the shift from the last cycle to this cycle. Until then, we might bounce around this summer, indefinitely.
In the States, it often takes a crisis before they really pull the lever on the stimulus. Is China different? Can they do it without a crisis?
I think they're having a crisis right now. I mean, PMIs are falling off a cliff. Unemployment data and surveys, obviously unemployment data in China is iffy, but are the worst they've been in decades. And so I think they're in a crisis right now. The problem, Kevin, is that the leadership is like Tea Party leadership. China's run by a Tea Party. Think of it that way.
Really?
It's fiscally conservative. Yeah. I mean, and again, that's something that in the West we miss. We all think that somehow Xi is a populist authoritarian. This is a person who, Liu He, his economic advisor, they are very conservative in terms of fiscal and monetary affairs. And they're trying, their number one prerogative has been to get leverage down. Housing is for living, not for speculation, right? That's the big mantra. And so how do you get people who are really committed to avoiding the Japan debt scenario, to avoiding the excesses of the West over the past 2 years? How do you get them to commit to those excesses? It takes a crisis, and I think they're in it right now. And that's why you're seeing this, in the media, we're getting this weird, political conflict in China, which is real, by the way. It's the talk of the town in China, too. This Premier Li made a speech where he said, look, we're an emerging market economy. The number one priority should be growth over everything else, including zero COVID policy. Because guess what? Zero COVID policy costs a lot of money. You want to implement that, you better be growing. That's what he said, verbatim. And that was shocking, right? Premier Li suddenly having a view. He's been kind of quiet for a few years. And then you have this basically quote unquote election coming up. So is there a conflict internal to China? I do think there is. I think there's two camps. One camp has been winning for the last 4 or 5 years. That's the camp of deleveraging. That's the camp of housing is for living, not for speculation. That's a camp that wants to see developers in China get crushed. That's the camp that wants moral hazards to be emphasized. And that's the camp that's worried about COVID. And then you have the more populist, more left-leaning, more, old school China camp that's like, nah, screw it. Let's just grow.
Now, how confident are you that that first camp is not going to just continue to institute these policies even into next year?
So I'm not, Kevin. I'm not. And that's why tactically, I want to be long bonds, short commodities until I see that camp is starting to change the view. And listen, how do you change your view? You don't change it before the election. You don't switch horses in midstream. So what Xi Jinping is trying to do is, I think he's trying to get a new Politburo Standing Committee filled with loyalists. I think he's trying to lock that in, and then he's going to adjust his view, right? I mean, you adjust your view after the election, if you will, not into the election, because then you're proving that you were wrong.
So what will that look like for us that are in the markets trying to anticipate that change? What should we be on the lookout for?
I mean, I think it's simple. It's a significant turn in Chinese credit impulse.
Okay.
In its 12-month impulse. That's, I think, the most important for China. Total social financing, bottoming and surging. But more importantly, it's the rhetoric changes. Not Premier Li's rhetoric, but Xi Jinping. Softening of these accountability rules. Basically coming out and saying, look, we're in a crisis. Anything that happens in the next 6 months or 12 months, it's not going to count towards your accountability. You're not going to be dragged to jail in 2035 because of what you did over the next 12 months. So those three things I would be watching: credit impulse, total social financing, Delta One, basically, if I can use that as an analogy. And then finally, what happens with rhetoric, and accountability rules. Those are, I think, the most important.
Okay, so now on the same token, you talk about eventually China will be a buy. Do you think eventually India will be a sell?
Yeah, so I think on the flip side of this is India, and I think India, why did India do so well? My reasoning is that there's three reasons. One is geopolitics. China started doing funny stuff domestically with regulation. U.S. China are engaged in this epic confrontation. And I think a lot of allocators out there just don't have time or nuance or patience to deal with China. And they pivoted to India. So that's the reason number one. The reason number two is that, India has a tech sector. It has the third largest number of unicorns in the world after U.S. and China. And when China specifically started to tinker with its TMT sector, again, I think that created outflows for those who were looking for EM tech exposure. And then the third reason is look, Modi is popular and he is pro-business, and he is popular. He continues to win elections. He's not losing his popularity, and I think that that's just he's a reformer. You want to be, my mantra of investing in emerging markets is you want to be where the reformers are. That's kind of simple. It's that simple. Now, if you actually, and by the way, the geopolitical part of the argument is also, it's not just allocators moving from China. It's also this idea that there will be manufacturing that moves to India. Now, let's unpack all of these things. First and foremost, FDI has gone up in India, absolutely, 100%. Indian trade has skyrocketed. Exports, absolutely, 100%. But it's all beta. It's all beta, Kevin. There's no alpha. What do I mean? India is not increasing its share of global exports at all. It's flat. The country that's increased its share of exports over the last 2 years is China, not India. There is no evidence of actual onshoring into India other than some anecdotals. And the FDI that surged into India, guess where it's going? It's all going into services. The FDI into the manufacturing sector is the same as it was 10 years ago. In fact, fixed capital formation, which is critical for a country as poor as India, like they need roads, they need railroads, they need warehouses, they need production plants, is falling as FDI is going up. What that tells you is that India is only attracting service sector FDI, tech FDI. And this goes back to Danny Roderick's famous paper, Premature Deindustrialization. Like, that's happening to India, which is a great title. I know. It's like
I know. I was just laughing about it. Who's the author of this paper?
I believe it's Danny Roderick.
Okay.
I could be wrong. But it's this idea that, like, India has a very sophisticated, robust services sector. But that's a plague. That's a plague for the country, because it's going to employ like a couple of million people in Mumbai. Great. Who else is it going to employ? It's going to ensure that India never escapes the middle income trap. Because in order to escape the middle income trap, you need to have sustainably high productivity growth. And manufacturing sector has much higher productivity growth than services sector. That's why it's okay for rich countries to be 80% services. But if you're trying to escape the middle income trap, you got to emphasize manufacturing. By the way, I think the Chinese are crushing their own TMT sector because they understand this, and they're trying to adopt the German manufacturing Mittelstand model. Because I think Chinese policymakers have realized they need to keep that productivity high if they're going to have growth and escape the middle income trap.
Okay, why don't you expand on that? Because I've heard you talk about that. And I think that's a great point. Talk about how China is changing and adopting more of a German model.
Yeah, so I think Chinese policymakers, like in 2012, I think it was 2012 when Xi came to California, sat with Obama on a bench. They were like very nice, and he visited all sorts of tech companies. China has always looked up to America. Even though there's bad relations, it's like Chinese respect strength and success. And it's like, well, America was successful. And America was successful in the 2012s because of the FANGs. Incredible companies, incredible innovation, blah, blah, blah. And then in 2021, January 6th happens. And, American crowds storm the parliament, and you've got representatives and senators hiding under desks. Now, all your listeners, Kevin, right now are like, what is he talking about? How does that have to do anything with the TMT sector? Oh, boy, yes, it does. Let me explain. What happened was I got more calls from Chinese policymakers and Chinese investors over January 6th than ever in my life.
Wow.
We here in the West, we looked at that. We were shocked. But there was also we understood, the meme nature of a lot of that stuff. Like the dude who looked like a Viking warrior was, hilarious. There were parts of this that were you're obviously it's a tragedy, 6 people died, but you were also looking at it like, okay, these guys are yahoos. It's not that big of a deal. Don't worry about it. It's not actually a coup, right? But then in China, they were not like that at all, Kev. They were like, oh my God, because you know why?
Because they're worried about it themselves.
And they're worried, but they also know how that would have ended in China. That would have ended in China with 1,000 people mowed down by machine gun fire. Capitol Police is not withdrawing, in China. They're not helpless in China. That thing is not happening in China with 6 people dying. And so Chinese policymakers have been kind of thinking about what's going on in the U.S. for a while. And that was the moment when they realized, oh my God, America made a tragic mistake. America became overly reliant on the tech sector, which doesn't contribute to alleviation of income inequality. It exacerbates it because it pulls wealth into these tech elites, and then everybody has an idiotic job driving an Uber or delivering food. So that's the first thing. The second thing is America's innovation is a freaking joke. These tech companies have contributed nothing to American hard power. What's America going to do? Uber us to death? Is America going to be able to order cheeseburgers at 3 a.m. and that's why they're going to win the war? No. Wars are fought on the ground with men carrying weapons. Period. End of sentence. The end. Next person who tells me cybersecurity is important for modern war, I'm going to slap them. Okay, I'm guaranteeing this to everyone listening. I will come to your house and I'll slap you. Okay, so why? Watch what's happening in Ukraine. The Chinese looked at this and they're like, the TMT sector is in no way going to contribute to our strength as a country, as hard power. We need to go back and emphasize hard tech. So, for example, they've created rules where their new Nasdaq-like index, only hard tech companies are allowed to IPO on this index without revenue. Only hard tech. If you have some stupid like business innovation where you're going to deliver cheeseburgers at 3 a.m., you're not going to be able to IPO on their like basically their version of the Nasdaq. And this was a realization to us that what Chinese policymakers are thinking is like, oh my God, the tech sector is going to drag us down as a country. And the German model does several things for a country. One, it ensures that you have a manufacturing capacity, which is important for wars, unlike tech. Second, it ensures that you have people employed in the manufacturing sector, which is important for income inequality. Those are good, high-paying jobs. And third, it ensures that productivity gains continue, given that you're a developing country and you probably need them. And so that's what they're doing. That's why they're regulating the tech sector. They also, they are also concerned about the proliferation of fake news, proliferation of idiotic conspiracy theories, all of that stuff that contributed to the January 6th, riot, is also something they're, in addition to everything else I said. And so, they're now emphasizing the Mittelstand. They want small and medium, like the Beijing stock market that they're going to open. It's a new stock market. It's going to emphasize small and medium enterprises. It's going to focus on the manufacturing. They want the Mittelstand, the small and medium kind of German businesses that have high skills and high capacity in particular areas of manufacturing. You know what I mean? Like there's companies in Germany that like make the biggest screws in the world, and they're the best in the world. And you only want those screws if you need big screws. Like that kind of, that's what the Chinese are emphasizing.
I didn't know about the world's biggest screw.
But look, the point of all of this is I think they're right. And I think what's funny about this is the Chinese knew there was tech carnage coming, or tech pawnage as I call it. They knew it was coming and they just said, fuck it, we'll do it ourselves. We'll shoot our own tech sector into the Nikkei. We're not going to wait for the 10-year to go to 3% for people to realize that, delivering a cheeseburger at 3 a.m. is idiotic. Like we're going to do it ourselves, and we're going to start pivoting to hard tech before anyone else.
Wow. Okay, Marko, there's so much I actually want to continue on with, but it is getting towards the end of our interview, and I have to ask you a couple questions at the end, and then for the bonus round, we're going to have something that we're going to check whether you have actually left Canada for good and how much of Canada you remember. But before we do that, we've already asked you our standard 3 questions, but we have 2 more that we've added since you've been on the show. And so the first one is Byron Wien, the surprises. And what Byron Wien describes as a surprise is something that he thinks the market assigns less than a 1/3 chance of occurring, yet he assigns more than a 50-50 chance of it happening. Do you have a Byron Wien surprise for us next year?
I'm on record saying it, so I'm just going to repeat it. I think that there will be a change in leadership in the Kremlin next year.
Oh, I would say that would be an unbelievable Byron Wien surprise, because I don't think anyone would have it as less than a 1/3 chance. They'd probably have it as less than 10%.
Yeah, so Russia has a tradition of revolutions. This is one of the biggest pet peeves of mine, is when people start telling me how Russians enjoy pain and how they can withstand pain. And I'm like, do you know anything of Russian history? This is a country that has revolts more than any other country in the world. They can withstand pain, but not stupid pain. If their policymakers do something stupid, they get angry, and then their ability to withstand pain means that they're more than willing to having their skulls cracked by police in protest. And I think elites in Russia know this, and so I don't think there's a revolution in Russia. I just think that the elites in Russia are going to, get ahead of that and do what they need to do.
So do you think it's going to happen well, forget about how it happens. What do you think the market reaction to that is, and does that allow Russia to come out from under its wall of shame in the financial world?
Like, yeah, the permanent bear market, pun intended. Yeah.
Yeah.
I think so. I think that could be well, look, I mean, if the elites do it themselves, it's not like it's going to be someone who's pro-West or whatever. But I do think that the West has an incentive in making sure that Russia is aligned with the West, not with China. There's all sorts of things that open up at that point in terms of possibilities. So yeah, I do think that could be a very huge investment opportunity, enormous investment opportunity. That will probably then sour in like 4 years. So don't get me wrong, like it's not a permanent investment, but is it a trade? Yeah, I think so. And also, by the way, huge shout out to Byron Wien. He's a legend. I met him. I had the fortune to meet him a couple of times. He's so gracious with his time for someone much younger than him. So he's a great man. So it's great that you have this as a permanent question.
Yeah, and listen, I'm a huge fan as well. I saw him one time at the Toronto CFA dinner, and he told the Concord joke, which I won't retell again, but it is a classic, and it still makes me chuckle thinking about it. I'll tell you sometime next time we're out for beers. Okay, so the next question is a Canadian legend, and this is Don Cox. And Don Cox used to talk about the fact that you shouldn't invest on what's on page 1 today of the newspaper. You should invest on what's on page 16 on its way to page 1. Do you have a Don Cox investment idea for us?
Yeah, and I'm stealing this one from several people that I really respect. So what's starting to bubble up, like whispers in the dark, like in the macro community, is Turkey. And what's happening in Turkey is really interesting. We have elections coming up in 2023, I believe in June. And Erdogan is going to lose. Not only is Erdogan going to lose, but it looks like the AKP is going to be replaced by the CHP and its allies. And so, this is something that the market's not going to wait until June to like confirm. I think it's going to start being relevant like imminently. And I think that it's really, really interesting because obviously Turkey has been left for dead. 70% inflation, incoherent monetary policy and fiscal policy, incoherent geopolitical policy in many ways. And so I think it's like a Macri moment. And I use Macri in Argentina on purpose because obviously that was a trade. It wasn't an investment.
Right.
But I think it will be an interesting source of geopolitical alpha in 2022.
That's a great out of the box kind of idea. How would you play it? Would it be just owning the currency, buying equities? Do you have a preferred idea of how to execute that trade?
I'm not sure. I'm going to leave that to people like yourselves.
Okay.
Yeah, but I like being at the beginning of the assembly line of the kind of like the market assembly line. And so I'm starting to get a little horny for this trade. And I think probably currencies is what I would do. It's the simplest, but it's probably going to take a little bit of time. The other issue is that I'm starting to itch to be a dollar bear, which I kind of always am, which obviously hurt last year. But I think that the dollar, if we have the slowdown in America, which is a natural consequence of a shift from goods to services, and then you have Chinese stimulus by September, October, November, growth differentials will favor China and the rest of the world. Dollar goes down. That macro story might also play a role in what happens to the Turkish lira as well.
So I can't help but ask the question since you brought it up. I too have a bias against the U.S. dollar, and I like trading from the short side. So I consider myself being flat is my equivalent of being long. I'm curious as to what your reason for such a bias is.
My bias is just that America has pursued the Buenos Aires consensus with the greatest enthusiasm, and that's my term for like non-orthodox monetary and fiscal policies. And so the market rewarded America for being populist and like insane because of growth differentials, which is hilarious. Yeah. So in 2021, right, go ahead. Sorry.
Oh, I just don't mean to interrupt, but I guess in essence, they ran the biggest fiscal deficits and it actually attracted capital. And it's funny because they are the ones that seem to be the least, the most vocal about fiscal deficits, yet they're running the largest ones. And then they get attracting the most capital from it.
And their inflation is the most I think, heterogeneous and the most entrenched. Like America actually has wage growth. America actually has like rent prices going up. In Europe, it's just energy, and in Asia, there is no inflation. So like, why are you holding on to American currency when they will be the last to defeat their inflation? It's eroding the value of that currency, like for the longest time. And so in the developed world, and so to me, I get the growth differentials. I get it, and that obviously helped the dollar in 2021. Stephen Jen, the dollar smile, he got it right. Like great call. I just think that going forward, if there is a downturn in U.S. growth, like it just starts going down, and then you have China-led stimulus in the rest of the world, not only will the inflation differentials not favor the dollar, and they haven't, by the way, for the last 24 months, but also growth differential won't. So everything will align perfectly, and then it'll be very difficult to be a dollar bull over the next 12 months, I think.
Okay. Now, listen, so we got to get to these kind of more fun questions I've got set up for you. And for those who don't know, Marko was a Canadian, or still is a Canadian, although he
Proud Canadian.
Proud Canadian. Although he was born in Serbia, he came to our country, and he actually probably knows more about Canada than the Canadians that are born here, because he had to take some tests. So I thought, and for those who don't know, he's actually left us, and he's gone to Steve Drobny, who's a legend in the investment industry. He went to his firm at ClockTower. Is it ClockTower Research? ClockTower Group. And Marko, I can't help but think when Steve was trying to entice you to come over, that I was thinking about that interview, that question at the beginning of COVID, when that fellow talked about, they asked him, would you rather be quarantined with? And actually, instead of telling you the joke, I'll just play it. Lena, can you insert it in here?
Because of coronavirus, you are going to be quarantined, but you have a choice. Do you A, quarantine with your wife and child, or B?
And so if you think about it, I kind of think about Steve Drobny like doing that with you, and he's telling you, do you want to come work in Santa Monica with me? And then you're like, I'm there. I'm in. And he's like, but I haven't told you the job. No, I'm coming. But I haven't told you how much you're going to make. I'm coming. Because you got to leave the Montreal winters for the nice climate of Santa Monica. And how are you enjoying that? Is it as good as it sounds to for us Canadians that are stuck up here?
So, Steve is probably going to listen to this podcast and he's going to laugh his ass off, because that's not how it was at all. At all. I made the poor man work really hard. He got Shaquille O'Neal to do a personalized video for me.
Come on, really?
I'll play this video for you one day. It's incredible. Because I was like, no, I'm not going to leave Montreal in the winters. I love winters. I love winter in Quebec. I love it. I really do. I know it's incredible. But I love it. And my kids got to love it. And I love skiing. And I love being able to get in the car and like 2 hours later you're in Mont Tremblant. Like it was incredible. Like this is. So it was very hard for me to actually leave Canada. The thing I miss the most about Canada, especially Montreal area where I live, St. Lambert, for those of you who know, is my 10-year-old daughter, and Americans are going to listen to this and think I'm just a bad parent, but I would give her $20 and say, get out of my sight. Take your bicycle and like GTFO, right? Like just get out of my sight. And she would go with her friends and I wouldn't know where my 10-year-old daughter is for like 6 hours. She was biking around the little village we lived in. And then she would come back and she'd be like, I had some ice cream. I'm like, I actually don't care what you did. Okay, cool.
It's old school. Come home when the lights come, the lights go on.
And that's something from like the 50s and 60s that you kind of can't. I mean, I live in Santa Monica, which is incredible. Obviously, I love it. And it's growing on me, especially the weather. You are right. You get really lazy out here, because you never have to like think about what to wear. The beach is right. I'm looking at the ocean right now from our offices, which are right on the beach. But Steve did have to work hard to bring me over here. And I always tell people the reason I'm here has nothing to do with the climate and geography. It has to do with Steve is awesome. I want to work with him, and I want to build a cool asset management firm that also sells some research on the side and that has differentiated views. And the cool thing is he truly lets me say whatever I want. So we had a big fintech event in Santa Barbara. We brought all these founders that we've invested in and NLPs, a lot of Canadian institutions in particular were there. And he literally introduces me and says, like, I have no idea what Mark is going to say. And then I proceed to tell everyone in that room that he needed to update the resume because I think tech is going to be in a decade-long, like, apocalypse. So
Oh, he's a great guy, and I must admit though, I would just be like, Santa Monica, I'm coming. Like that would be all. I would be like that. I'm done, and it's just probably 55 decades of living in Canada. I'm not quite as enamored with the weather as you are. Okay, so let's go with our Canadian questions. I'm gonna rifle them off and see how you do. Okay, Canada became a country on July 1st, 1867, when the British Parliament passed the British North American Act. But what decade did we get our own flag?
1960s.
Yes, you are correct. We got our own flag only on the 15th of February, 1965. Okay. Wow, that's really
And it was
impressive.
a kid. I think it was a design done by a kid. And I think there was also a design that had a beaver in the middle instead of the maple leaf.
They should have gone with that.
I think so too.
Okay, so O Canada. Now, this is a little bit of a deep cut. We'll see how you do in this one. O Canada is our national anthem, but originally there was another song that was written around Confederation that was considered. Can you name the writer or the title of that song?
Oh, my God.
Yeah, it's a deep cut.
No.
Okay, the only reason I know this one is because it was written by Alexander Muir in 1867, and it's called The Maple Leaf Forever.
Okay, nice. Okay,
so O Canada, what year was it adopted as our national anthem?
I think, I know we had amended it recently.
Yes, we did amend it recently. I think we've amended it numerous times.
I think officially probably in the 80s. I don't know.
You're correct. 1980. You're doing well. Okay, here we go. Geopolitical question for you. How many times has Canada been invaded and by who?
Oh, that's... How many times has Canada been invaded? It was invaded by the U.S.
Okay, yes.
I'm going to say it was invaded by the U.S. twice.
You're bang on. You're doing so well. Can you name the years or even get the...
Oh, well, it was invaded by the decades. Okay, I'm going to... Oh, that's hard. In the 1800s, obviously.
No, the first one was 1775 and then 1812. And for those who don't know, it was actually Britain. It wasn't Canada at the time.
That's right.
And but then we did go burn down. We were kind of pissed about that, and we went and burned down the White House in 1812.
And that's something every child learns in Canada.
That's right. Okay. Can you name the longest highway in the world? And then for bonus points, can you tell us approximately how long it is?
Canada won.
Yes, it's called the Trans-Canada Highway. How many kilometers or miles do you think it is?
I think in kilometers, I'm going to say it's 5,000-6,000 miles.
Oh, you're pretty close. 7,600 kilometers.
Boom. Yeah, and the funny thing about this for Americans, when a bridge on Canada 1 breaks, we have to take detours through the U.S.
Yes,
because it's the only highway.
Yeah, that's right. There are points of it. It's a big deal. Okay, so I want you to order these countries by the amount of coastline. Okay, so I'm going to give you 6: U.S., Australia, Indonesia, Norway, Canada, Russia. So order them, and you can start with the biggest and go to the smallest, or go the other way, whatever you prefer.
I'm going to say Canada, Russia, Indonesia, Norway, U.S., Australia. No, not Norway. Norway's last. Let's go with U.S. No, let's go Australia, U.S., Norway.
You're pretty close, except for the Norway you got wrong. So Canada is the most by a factor of 2. We have almost 202,000 kilometers of coastline. I guess that's what happens with all the stuff up north, right? But then, much to my surprise, it then goes Indonesia, and I guess it's just a function of all the islands.
Yeah.
But I couldn't believe this, and I almost think maybe I got to double check my source. Norway's next, then Russia.
Yeah.
And then Australia. Well, actually, there's some more in between, but I just added Australia and U.S. because those are ones people would know. So it's Australia and then U.S.
Hey, okay, I got a question for you, Kevin, right away. That you just inspired me with that. Latin motto of Canada.
The Latin motto of... Oh, I don't know. See?
Amari usque ad mare. It means from sea to sea. There you go.
Very fitting. Wow.
It's fitting.
Okay, so talking about water, Canada is home to 20% of the world's fresh water. In fact, Canada has more lakes than any other country on Earth. More than half of all the lakes in the world are located in Canada. Canada is home to the 2 top 10 largest lakes in the world. Great Bear and Great Slave Lake forget about that. Okay, Can you tell me what is both the deepest and the largest freshwater lake that is not Canadian? It's actually in the world, but it's not Canadian.
Lake Balkai.
Yeah. And it's actually this Russian lake that's some stupid deepness, like I can't remember, but it holds 20% of the unfrozen fresh water on the surface of the earth. It's
right.
It's just it's crazy. They got creatures down there that nobody's ever like seen. Anyways, okay. The lowest temperature ever recorded in Canada was in Snag, Yukon. What was it?
Minus 67 Celsius.
Oh, really close. Minus 63. Okay, we're almost at the end here. Now we're going to get to the ones that you should know because it's Montreal based.
Oh no!
Okay.
Oh no!
So
now I'm going to lose all my friends. Go ahead, Kevin.
Right. Okay. The beer named after Canada is called Molson Canadian. Okay.
Yes.
It was founded in Montreal and is the oldest brewery in North America and continues to produce beer on the site of the original brewery. When was it founded? And like within, I'll give you within 25 years.
Within 20. Oh, I'm going to say it was founded in 1825.
Pretty close. 1786.
Oh, wow. Well, I got it wrong. Wow, that's old. Dang.
Okay.
And by the way, Molson had a bank as well. Molson Bank, which became Bank of Montreal. Am I right about that?
I didn't know that.
I think that Bank of Montreal was the Molson Bank, but we should check that.
Really? I think that someone told you that. I don't know. We're gonna have to check that. I'm not gonna.
We're gonna have to fact check.
Okay. All right. Only just we're down to the last couple here. So let's go. Canada's national drink is the Caesar. It was invented in Calgary back in 1969. It is similar to the Bloody Mary, but it uses something instead of tomato juice. Do you know what it is?
Is it the clam juice?
Yes, it's the clamato juice. Whenever we go skiing and we get all the Americans up, they all want to drink these Caesars, which I think are gross. But anyways, Canadians eat more of this than anywhere else in the world. However, it does have a different name.
Okay,
it's a staple. It's a staple that you ate when you were growing up.
Okay, hold on. Is it donuts?
Nope.
Oh wait. I should know this. Wait.
Your parents probably served it to you for dinner.
More than anybody in the world. I know we eat more Slurpees than anyone in the world.
Yes, that's true. That's Winnipeg. It's the Slurpee capital of the world.
Which makes no sense because it's cold. I don't know. I don't know. I'm going to kill myself now.
It's macaroni and cheese. We call it craft dinner.
Yeah. Okay. Fair.
Okay, here we go. Canada became the second country in the world to fully legalize marijuana in 2017. The first country, can you name it?
The first country to legalize marijuana was the Netherlands?
No, it was Uruguay.
Okay, yeah.
I had no idea.
That's true.
Name the three Canadian cities to host the Olympics.
Montreal, Vancouver.
Yep.
How do I not know this? Oh, Calgary, of course. Come on. The greatest Winter Olympics ever. Eddie the Eagle, the Jamaicans.
Yes, Eddie the Eagle is a great story. For those who don't know it, go look it up. I think there's even a movie about it.
The movie's amazing. If you have kids, go and watch it with your kids. It's the greatest story for kids to watch. I love that movie. I cried watching it on the plane.
I could just picture you, Marco, watching the Eddie the Eagle story.
I cried, just crying. I mean, I was like...
You really are a Canadian. Okay. Canada's beaver is the second largest rodent in the world, weighing up to 60 pounds, and they are tough little buggers. Everyone thinks they're nice, but they are not. They're miserable animals, and we could talk about that another day. Can you name the largest rodent in the world?
Yes, I can.
Okay.
Capybara.
Yeah. And those guys are awesome. They are the greatest thing. A capybara beats the beaver any day of the week. And I know as a Canadian, I shouldn't be saying that, but the beaver is like a wasp is to a bee. Like, bees are your bros. Bees, make honey. Bees don't sting you on the most part. They just leave you alone. Wasps, on the other hand, they're miserable fucks. They are always trying to get you. They don't make any honey. That's kind of like a beaver versus a capybara. Okay.
Yeah, but that's why beaver is a great emblem for Canada because that's what we learn how to cross check before we can walk.
That's right. Okay, two last questions. Churchill, Manitoba sees one of the largest annual polar bear migrations in the world. It's also home to another animal's largest migration. Can you name it?
Can I get a hint? Is it a bird?
No, it's in the water.
It's in the water. Okay, like beluga whale?
You got it. Now
Oh.
the last. Oh no, I have two more. One last one, and then the last fun one. Okay, the most common last name in Canada,
Ooh.
and it's not what you're gonna think it is.
Khan?
Lee, L-I.
Lee. Oh, shoot. Okay.
Yeah.
Yeah.
I was shocked to hear that. Okay, final.
I went with the immigrant last name, but I got it wrong. My question.
Okay. Canada has an ongoing dispute with this country, and we have been fighting over an island in
Fucking
the Arctic.
Danes. Fuck them. All right, it's our goddamn island, you know?
So there's an island in the Arctic since the 1930s, and we battle it out by leaving Canadian rye whiskey or Danish schnapps, and we go back and forth on it. And obviously, it is a topic near and dear to Marko's heart because he knew immediately what I was talking about.
Yes.
And I don't know if you were part of the crew that's replaced and put the Canadian rye up there, but that was obviously very important to you. Listen, Marko, it's always a pleasure having you.
Wait. How did I do?
I don't know. I didn't keep track. It was
pretty good, though.
You were better than pretty good. I think you got like way more than I would have gotten. So
Do you want me to single Canada
no,
like a full rendition?
No, we will skip that. But I do want people to tell you to tell people where they can find more about you and your firm and give them the whole 9 yards.
Okay, cool. Well, I think the easiest. I'm on Twitter now, by the way,
Yes.
Kevin, as you know.
So listen, everyone, we all have to go and follow Marko on Twitter because he's in that kind of nice stage at the beginning where he isn't disillusioned. He still thinks people are nice. He's responding to people with actual earnest answers instead of just shit posting. So enjoy it. It's going to last, I don't know, maybe 1-2 quarters more before he finally just realizes how miserable it is out there. So go and follow him because it is just a lovely time in a Twitter person's life. What's your handle?
I'm at Geo_Papic. And also, ClockTowerGroup.com is our website. Anyone who's looking to invest in weird things or looking for macro geopolitical research can just, contact us through the website or LinkedIn. Just LinkedIn me as well.
Terrific. Well, Marko, thank you so much for making time for us. It's a lot of fun. And listen, next time you're in Montreal and want to go skiing, you look me up. I'll drive over there and we'll go ski Mont Tremblant, the bitter cold. And Expo 67 is one of my favorite runs.
Oh, awesome. Yeah, no, I love that run. I mean, I'm a big Tremblant fan. My kids grew up on that mountain. So thank you, Kevin. It's a real pleasure and can't wait for the next one.
Have a great summer. Take care. All right, Patrick, it's time for talking charts. Interesting time, actually.
Oh my God! We were trying to do a shorter show, but we said we got to talk charts. It's such an important moment in the markets. Last week we had a couple of things that we were watching, and I'm just going to quickly go through them, and then we'll talk about the top 3 things to watch this week. So we were talking about consumer staples, and obviously Walmart and company really kind of hammered this entire space, but they've been bouncing back pretty good in the last little bit. Obviously, the market's been running, but the consumer staples were such a safe place to hide throughout all the carnage, and that all changed 2 weeks ago, right? And so they are bouncing, but the whole market's bouncing. So it'll be interesting to see whether they kind of regain that traction and outperform, or whether they now are going to be much more just correlated with the index. Do you have an opinion on that?
Not on the staples. I'm more on the discretionary. I think the discretionary is definitely going to suffer, consumer discretionary. But I think there's better things to own. Let's put it that way.
Yeah. So and the second thing that we were talking about last week were those treasury bonds. And we're just seeing how, listen, you've been on this call pretty early as well. Just simply the fact that the real kind of ugly part of the bond drop already happened. And if you kind of look at it, we're trading at the same levels now that we were trading back in late March and early April.
We've gone nowhere. And you've earned your coupon in the meantime. So right. There's better longs, there's better shorts, and I think it's just going to be. If I had to guess, Patrick, I think these things grind higher for a little bit yet.
They can grind higher. Like I'm looking at retracement zones and other things that could. But obviously, if the rate of change of inflation cools and everyone sort of sees that this kind of runaway inflation is just high inflation, then it kind of may take a lot of the selling pressure off of bonds. And I don't. It doesn't make me excited about being bullish them, but certainly we might be at a period where they simply are not going to be as ugly as they were.
You know what? For me, Patrick, I need people to go back to telling me I'm an idiot for being short them. And right now, there's too many that were agreeing with me. And so when people go back to telling me what an idiot I am for being short bonds, I'll know the trade is ready.
Yeah. Last week, we were looking at crude oil and whether it was going to break out. And I thought it was appropriate because, Cuppy already loaded to the gills on the stuff. But it did break out just yesterday out of that little sideways consolidation. Now, I think it's important to look at the July contract because when you go to the continuous chart and it shows that spring print up in the 125 to 130 range. That was on those previous contracts. But when you're looking at what the contracts that traders are currently trading, we're about to break to a fresh high. And more importantly, the USO, which is also a very large amount of retail traders follow, and because it owns more of a strip of oil, it's actually also approaching its previous high. And so there's a whole whack of traders that might start making fresh new 52-week highs in terms of what they're seeing on their screens. And it could really build some momentum here.
Patrick, as you know, I'm no technician, and I don't even play one on TV. And I look at this chart, and there's some sort of crazy rising wedge or something there that you got to tell me what it is, but it looks bullish as AF, like it doesn't.
Well, the pattern that I was more watching, if I can, with a very thick crayon, force some lines on here. But this is sort of a horizontal triangle, which was basically a sideways consolidation, and we really legitimately now have broken out of that triangle formation bullishly to the upside. The only thing that's an obstacle as well is a risk of rejecting its previous highs, and this is why while I want to identify that oil is very bullish on its charts, it looks very bullish. I would side with the bulls, but it is a key hurdle technically to beat the previous highs, and that's actually one of the key things to watch, I think, at this moment. And so I want to use that as a segue into the top three things to watch this week. And I lumped energy, including that crude oil chart. So I already kind of gave you what I was thinking in terms of just it's got to beat that previous high. But when you look actually on two other contracts, I want to look at gasoline futures. And those did break higher highs even on a continuous contract basis back a few weeks ago. The entire pullback lasted exactly 2 days, has nicely consolidated all above fib zones, and it's rolling right back up for another breakout. Looks like $4 a gallon. It might be broken out legitimately this time around. It'll be really interesting to see whether gasoline can build on that. The other one to watch is that we had the breakout on the upside of nat gas to a fresh high, and it kind of didn't want to stick in there. I know you don't like to call these prairie dogs when they don't have an extended base along the top, but to me, any attempt to break out to new highs that's rejected is something that I'd like to sneak the prairie dog name into. But it did reject breaking out that high, but this pullback, if we see what nat gas has done every single time in the last two corrections last 2, 3, 4 days, immediately get bought on dip, and then they reverse it and just take it higher again. It'll be really interesting to see whether or not that pattern reemerges on nat gas here. Any comments on those?
Well, I'm trying to do my best Jerry Parker impression and not look too closely on natural gas because I've been long the whole strip. And at the risk of gootering it, I'm just going to say no comment.
The question I have for you, because I haven't looked actually recently, has farther out on the strip, has it started to rise?
I haven't looked. You're catching me off guard because I really, truly am trying not to look at it that much either. But it is the whole curve's moving up, but it's obviously the front of the curve's moving more.
Yeah, and that's the interesting part with this ridiculous backwardation. The backwardation was jammed up entirely in this 2022 calendar, and then once you go out a year, it goes right back down to the bottom of the ranges, and this is why when everyone talks about this idea of nat gas going, that the arb between European gas prices and North American is about to close. Why isn't the strip starting to reflect that? That's
Well, I think the FAR contracts are moving up. They're just not moving up as fast.
well,
Just,
yeah, but the
just
thing
pull
is that
pull up.
but when
next,
when you make a bold call saying that it's going to close the gap to the
Yeah,
North
but
American prices, you would think the back end of the curve would start to really move.
you got to stop listening to everyone in that other podcast you cheated with me on with the bold calls. The reality is that most of these things go slower, Patrick.
No.
Yeah.
Anyway, listen.
Patrick's
charting,
funny. Do I get no comment about the?
I'm not gonna comment. I literally am not gonna comment. But I do want to say though that I'm more interested actually on this front month contract in terms of the observation you're making, and it'll be really interesting to see this week whether it gets bought on dip. And so that is what I'm watching on the energy front. The second thing, well, we have the jobs numbers coming out next week, right?
The job numbers have been really, really tight for a long time, and the real question is, are we going to finally see a little bit of softening in those numbers? And then if we do get that softening, what does that mean for the stock market? Is that a good or a bad thing? I don't know. I probably would lean towards a softening of the job market will initially be viewed for risk assets as positive because it enables the Fed to take their foot off the brake a tiny little bit. Yeah. How about you? Do you feel the same way?
Well, you know what? I mean, everyone's talking about economic slowdowns. Let's not call it a recession, but I mean, obviously, there's an attempt to slow everything down, and you would imagine that that's got to at some point start to reflect in these numbers, and that's why I think it's important just to see when that kind of pivot moment is, when we really start to see those numbers reflecting a true slowdown.
And then how the market reacts will be really telling.
Oh, for sure.
All right.
For sure.
What's the number one thing you're watching next?
Well, we just got to watch the equities. And I think the bigger question, okay, look, both of us were looking for the bounce. Both of us were highlighting the oversold state of the market.
And do you know what's funny, Patrick, is that neither one of us talked to each other when we did that.
Yeah, that's true.
Because we Lord knows we get enough of each other on Friday afternoons, so we try to avoid each other during the week. But it was funny in hindsight that we both kind of saw the same thing together.
Yeah, in our own for all different reasons, but I mean, in the end, it really did. And one of the big tells for me last week was when the market tried to break to a lower low. And it never created any short-term follow-through selling. Usually, once a break to a lower low hammers all the stop losses and everything sitting down below, it usually can spur another liquidity event, some further margin pressures and other things that would have driven a full move down to 3,700 very easily. And instead, no, just got bought right away and popped right back. It was a sign that the selling may be exhausted. And now the bigger question, and the reason it's number one is, okay, calling it short-term bottom is actually something that a few people can nail. But the bigger question for us to try to figure out is this just a bear market rally bounce that, we get up to 4,300 or something as they squeeze out shorts and everyone starts kind of FOMO chasing the market higher a little bit. And then does it roll over in the summer? Or are we actually witnessing potentially the place where the trading low comes in for the year? And I don't know if I have a high conviction call on that. Do you have a higher conviction call?
It's a tough question. I will say this. I've contended that this year is going to frustrate a lot of people, and that the bulls will be too bullish at times and the bears will be too bearish at times, and we're just going to grind around. Whether that grinding around means that we roll over at 4,300 or 4,600, I don't know, Patrick, but I do know that if the stock market were to really accelerate, like if we got a situation where the economy slowing down caused the Federal Reserve to take their foot off the brake enough to cause a move into risk assets, you would see the Fed going back in terms of pushing back against that rise in the stock market. So I would say this, that yes, the trend right now is higher, and yes, you could still make some money, but be careful as it goes higher, the risks increase, don't decrease. And it's specifically because although right now people have forgotten about the Fed and they think that there was the full hawkishness was baked in, the reality is that they do want stocks to at least not go up, because that's how they slow down the economy and inflation's still running hot. And so I would be worried if the market got too excited over the short run.
Well, Kev, I'm approaching this very simple. Very, very much like what we saw in March. There's during a bear market rallies, the first kind of Vanna slingshot that happens that catches everything, and there's usually a fast move. I think a move to 42 or 4,300 right now is a very natural thing to happen over a week. The bigger question in my mind is that once that kind of a short-term buying pressure is kind of through, does the smart money use it to sell? And do we see that they start to unload into the strength after we see a bit of a pop? And I think that that's the key thing to watch, at least for me from a technical perspective. But on the short term, I think that a little bit more follow through of 100 or 200 points is a very natural thing for the market to do at this point.
All right, what else are you watching this week?
Well, you know what? It's worthy to just highlight NASDAQ. I mean, the NASDAQ has just been so weak relative, and while it has bounced, it's again from a technical perspective way weaker than the S&P. Even though today on a percentage basis it beat the S&P by a point, and when you look at how much work, let's say the NASDAQ would have to do just to even get to a 50% retracement, it has to clear 1,000 points easily in order to just get to the same level that the S&P would be at 100 or 200 points from that. Point is that NASDAQ's very weak, and while it has room to bounce here, it'll be interesting to see whether it continues to, on a relative basis, dog the S&P. Another interesting thing that I wanted to observe was the fact that the Russell did not make a lower low in the last sell sequence, which actually can arguably be a little more supportive to the idea that maybe the small caps might take some of that rotation. And while I'm a little more cautious about the NASDAQ names, it's interesting to see whether or not the Russell actually shows up this time around.
You know what's funny, Patrick? I know for sure that you don't read all the things that I write, and that we haven't talked about this, but one of my favorite trades, long small caps, short NASDAQ. I think you can do that for years to come almost. Honestly,
great minds think alike.
I do, and it actually scares me that you're highlighting it.
There you go. And so the euro, the one interesting thing, obviously the dollar index did break a decade high over here and did not hold it. And what's interesting is that we're now in the midst of a correction. It'll be really interesting to see whether or not the dollar correction is exactly that, whether or not this is simply going to mean revert a bit to the downside, finish the correction, and then we see that it's bought on dip and the dollar bull resumes, or will we see the first crack in the armor with a failed rally attempt? And I think that watching the euro is going to be key. I think it's easy for the euro to get back to, let's say, 109 on the upside on a bounce, but will we see that the euro can sustain another sell cycle on the downside? And that's something that's going to be on my mind. Is there another currency pair that you're watching that we should highlight?
Well, I always loved the yen, but I'll just say the dollar itself, I'll go out on a limb. You're expecting this to be a correction in the bull move. I think the bull move's over.
Really?
Yeah.
Well, you know what? I'm going to wait for the charts to confirm that. But I mean, look, the dollar did have an extraordinary run. And the thing is that I think there has to be truly a macro catalyst in order for us to see, let's say, the dollar index ripping to 110, 120. And the fact that, the Twitterverse has had Brent Johnson, our milkshake man, on almost every single podcast, you have to ask the question as to whether that's a sentiment thing that contributes to marking a short-term swing high. God bless him. I love Brent to death. And if you're listening, Brent, this is not a slight on you, but it's usual that when something is that popular and that hot, they want to bring someone who's been right on the call onto a podcast, right?
Yeah. Listen,
it's
there's some famous people getting on to CNBC, some famous bears, and when they're on that you should be pulling out the blue tickets.
There you go. Just highlighting how weak Bitcoin has been through this, and it's not to shit on the coin, but it is to shit on the price action of the coin. The thing is that you would think that it's been a risk asset, and we've been in a risk off cycle, and you would think that with everything bouncing as the dollar pulled back, that should have given some sort of a tailwind to this, and it looks like it's actually going to head down and go for that 25,000 test. Like there's no bid.
It's not you. I just don't like you. That's what you sounded like when you did that.
Well, no, look, read the tape. Read the tape.
I'm trying so hard to not offend the Bitcoiners. Yeah.
No, but let's be realistic, okay? Whether Bitcoin works or doesn't, just the way we have guests that come on and say it's like trading sardines and they like to trade them, right? And that's fine. Traders are traders, and if Bitcoin is something that you like to trade, that's okay. I'm simply looking at the chart, and the fact is that we have seen in the past that it worked with a correlation with risk assets, and it's just not showing up this time. That's the only observation I wanted to make. Is that not a fair observation?
It's a fair observation. I'm going to leave it. I'm not going to say anything. I just get myself into trouble on that one.
Yeah.
Okay.
All right. The other thing that I wanted to observe is how gold and silver really have just been behaving like a cross asset to the dollar. Literally, the moment the euro put in a short-term low and bounced, so did gold. It seems like we've seen gold kind of decouple and do its own thing on many occasions, but during the last few months, it really seems like that dollar move was simply one of the key precipitating drivers of the gold selling, and it really is behaving that way. So I make this call on you then, Kev. If you're making the bold call that the dollar top is in, is that the bottom of gold then?
Yes.
Oh my God! There you go. Everyone's heard it from. I remain bullish, bigger picture, but I'm just not ready to be hammering the table, saying this is it. And you
listen,
blow it up here.
I'm not hammering the table because it is a low conviction trade, but I still believe that. You know what I mean? There's times that I feel like, I'm confident this is going to happen. I'm not confident this is going to happen, but I do believe that is the most likely scenario.
Well, Kev, that's where we're going to wrap it up for this week's Talking Charts. So let's give the show a wrap, buddy.
All right. Thanks for tuning into the Market Huddle. We appreciate you spending some time with us. Please give us a follow on Twitter at the Market Huddle. Lena's on there, and she gets bored to talking to Patrick and myself. You know all the places you can find us. Go check us out there, and please, if you could, review us. It's always fun to read those reviews. Patrick, where can they find you?
You can find me at bigpicturetrading.com, or you can follow me on Twitter at Patrick Ceresna.
I feel Kev,
where can they find you?
Well, before I answer that, I feel like if trying to find Patrick, it's like trying to find where's Waldo. You never know what country he's going to be in. But right now he's in Italy. I'm Kevin Muir. You can check me out on Twitter at Kevin Muir, or follow my newsletter at themacrotourist.com. And listen, we can never have too many friends. Bear market, bull market. We're just happy to spend some time together on this crazy ride. Now stick around for the after show. Okay, so Patrick, you got to rate your beer.
Yeah, you know what? It's a Pilsner type of easy drinking beer, and so I'm going to rate it in the Pilsner family, and I'm going to give it a an 8.1
Oh.
out of on a Pilsner basis. I think I usually score the middle of the line Pilsner at 7.5, and so this is better than a middle of the pack Pilsner. But I wouldn't go into the nines with it. It's but I'll tell you, if you're out in Italy and you have a chance to order one of these, I think it's worth ordering. It's a nice beer.
Okay. Lena, are you there? We didn't invite you back on.
I was just thinking if the beer had banana taste because the monkey's holding a banana.
Oh, that's true.
I
That
don't know.
would have been good because we do like ourselves some banana bread beer here at the Market Huddle. Or at least Lena and I like
at
it.
least two
Yeah.
of the market huddlers.
Two out of three.
So, Lena, you're going to be there on Wednesday, right?
Yep, I'm gonna be there on Wednesday. Somebody's gonna have to, chaperone the whole thing.
Take care of business.
It could be fun. I hope we don't get rain. That's the thing that's going to really suck. But we'll figure it out.
Well, are we doing rain or
Rain
shine?
or shine, baby. We got 50 beers, 50 pitchers, or 50 pitchers equivalent, or whatever they are. We got to drink them. We got to get through them. So, and we've been putting this off for a long time. Lots of people I know. Some of our listeners have booked themselves flights, hotels, the whole 9 yards.
Wow.
So there's definitely going to be some crew coming in. It's happening no matter what.
No matter what.
Yes.
No matter what, it's happening.
Well, you know what? Hopefully, the market gods bless us with a clear sky for the time of the huddles going on.
That's right. Let's pray to those gods that are not only are they in charge of markets, they are also in charge of the weather.
In charge of the weather.
We're gonna-
Didn't realize that.
it's something new. We just figured it out.
Okay, so here's the real question. Everyone wants to know. Patrick, Lena's not going to care about this as much, but you are born around when I'm born, even though you pretend like you're so much younger just because you have hair. Top Gun. It's coming out.
I'm going to see it.
Yeah. Listen, we're all going to see it. The only question is how quickly we're going to see it. Like, are you going to rush out and watch it right away?
That's a good question.
Yeah.
You know what? I'll listen. Okay, here's the way I look at it. I didn't even look up yet the release date. Do you know the release date?
I think it's
When is
already going. I see stuff on Twitter. People have seen it.
Oh shit! See, this is clearly how motivated I am. I didn't even know it was released.
Yeah.
So I am going to go see it at the first opportunity. Maybe it's maybe I'll see it in the next couple of weeks for sure. I'm definitely going to go see it.
Yeah, I'm going to see it right away. Like, let's face it. We got to go see it. It's getting good reviews. People are saying, like, I think it got 94 tomatoes or something.
Really?
What's the premise?
I don't know.
Considering I've seen the first one, obviously.
Tom
the
Cruise is a
original,
cocky airline fighter pilot, and something happens, and
Airlines?
he rides his motorcycle and takes off his shirt and plays volleyball. Like, what else is there? I don't know. I do know that the kid from Divergent.
Is he an airline pilot, or are you just gonna slip?
Okay, so
away?
listen to this. Remember, Goose died, right? Goose was the
Yeah.
guy married to Meg Ryan. Well, after Meg Ryan's botched plastic surgery, so she was stuck, and she had a kid that she had to raise, and this kid is Goose's son, and he's in the movie.
Really?
Yeah, and he's a little
Nice.
he's a little torn between everything, and he's the who plays him, the actor from Divergent, who's that one kid, the bad kid in Divergent, who was once described, and I'm not kidding you, as having one of the most punchable faces in Hollywood. He must have a bad rep because some
Divergent.
yeah, like the bad kid, the one that tattles on everyone and is like just an idiot.
I can't even remember that movie.
But anyways, Goose's kid's in it. Iceman, I don't think he's in it. He's I don't know what's happened to Iceman. He put on some weight and he's dealing with stuff somewhere else. I don't think.
Oh, Miles Teller.
Is that who it is?
Yeah, the guy that was also in Whiplash.
Oh, I don't know. Anyways, we got to go see it. It's going to be awesome. Let's just face it. Let's face it. It's going to be awesome. And I know that's setting really a high bar, but it's a classic movie. It's going to be good. Did you see the Tom Cruise is also doing another Mission Impossible?
No.
Like
He's like Cher. He's never gonna age or die. It's just the
he's
way
not
it's gonna
human.
go.
Well, you know what? Maybe he actually did achieve the 11th level of reasoning or whatever, and it's made him immortal. Maybe
You
there's
know what?
more to this Scientology stuff than we think. Have you
Could be
guys
possible.
ever thought about that? What if it's true? I know. Is that my
thought.
my thought?
Deep freaking thought.
How many Scientologists do you think listen to our show? Do you think we're this is a large community that I'm now offending?
Yeah. You better change your address quickly.
Have you ever gone to the place in Florida? What is this on the near Tampa Bay, and you see the Scientology building? It's kind of spooky, and like Tom Cruise has got a condo there and stuff. It's really odd. Like I know I'm realizing I'm alienating part of our base here, Patrick. So I apologize for this, but it is kind of spooky and it's a little weird. And when you're there, you definitely feel like a different vibe.
How does it work? Can you get a tour?
I think
You know what I mean?
think
When
if
other religions.
I think that if they think you're serious, they'll give you a tour. But I think that if you go with an attitude like that, you don't.
Like this, they're not taking it
Yeah.
seriously or whatever,
Yeah.
then they won't. They'll
Like if
just,
they don't think you're in for the 11th level of
But,
reasoning or whatever.
You know, if somebody's like genuinely curious, about
Oh,
this, what is this
100%
really
they give
about?
you a tour. Like there used to be
okay.
one on Yonge Street, Lena. Like honestly, you used to go.
There's one in Vancouver too.
Yeah, you used to go by. You walk by, and they'd be out there like trying to get you books and stuff, and people would always go and like say, "Oh, my friend was interested," and like push the person into the store and then run
Oh
away.
shoot. Oh my.
That's awesome.
Anyways,
But I think you have to have lots of money to
no,
join.
you don't.
No? I thought like every program or every.
No, I
level
think
Alright,
I think they
let's-
try to
let's-
they
let's
try to
change this
take. Anyways,
before-
we should probably talk about something else.
We don't know anything
Yeah.
about Scientology. We
Apart
don't
from
know
that, it
anything.
makes
Well, we don't know
apart
what
from
we're
it makes
talking
you
about.
immortal and look like Tom Cruise.
Yes, that is now fact.
Yeah. Lena, have you seen anything interesting lately that you want to tell the world about?
Oh, I was telling you about this off air. A documentary called Our Father on Netflix.
Oh yeah. So why don't you tell the listeners about it?
So basically, it's about this guy who's a fertility doctor. People go see him when they have, trouble conceiving and whatnot. Turns out that he was inseminating many women with his own sperm instead of like donor sperm or the other partner's sperm or whatever. So he's got basically over 90 kids that share his genetic makeup. And people that were involved didn't know. So that's kind of a premise of the show. It's very interesting, but also very alarming. So, just to end it on that.
On a happy note. And is it good show? Like, is it worth watching?
Yeah, I think it was just it's like a one episode, like a 2-hour thing or hour and a half thing, and you watch the whole thing and you're just like, how could this actually happen? But, if something goes wrong, he's got lots of organ donors.
Think positive.
Just saying.
You know what? I think he was just planning. Like that's the only reason I had kids.
You may just need a new kidney at
That's
some
right.
point. So, yeah.
Oh,
But it's definitely interesting. Not a happy documentary, but it's definitely interesting.
Patrick, why don't you tell us about what you're doing and where you are?
Well, I'm right now just on the in the Tuscany area.
He doesn't know where he
doesn't know
is.
where he
No,
is.
I am.
He doesn't know where he is.
Now. I'm like 7 drinks into this, and I'm somewhere in Italy. Like,
No,
you
but
know.
I was in Bologna, Florence, Siena, all the kind of nice cities, and so I'm getting on a plane at the end of the weekend and making it back for some sort of piss up. I heard there's going to be a great time.
I think there is going to be a great time. So you know what? Patrick and I do not actually talk on a regular basis about the market, but we do talk about other things, which is kind of funny, actually. He sends me a picture. He says, I just got off the plane in Italy, and this is what's in their lobby. And it's not a Maserati.
The Lambo.
A Lambo. So what were they just
Yeah.
advertising Lambos? They just thought,
Yeah,
let's-
they're just basically right in the airport. You get off the plane and there's a Lambo right there. It's like, where's the keys?
And it looks like it's like made in that fishing lure green, like the one I'm talking about.
Fishing like green.
The ones the crypto kids like. Come on, I kind of like it. You have the guts to do a fishing lure green Lambo. Like I like people that go bold with their cars like that.
Yeah.
I call it overcompensation.
Oh, it's 100% overcompensation, but you're already like overcompensating with that. So you might as well go the whole 9 yards.
Exactly. Like,
Fair.
Right?
if you've already got small hands, you might as well go straight with the Lambo. Like there's no hiding it now. Everyone knows.
So my brother is a much bigger guy than me, and like feet like almost a foot taller than me. It feels like at times, and we always joke that maybe I'm the mailman's or something. And whenever I got a big car, like a big SUV and stuff, he goes, "Oh, you got small man syndrome." That's what he called it. And that's all I could think about when Patrick.
Well, what is your brother
That's why
driving?
Patrick picks me up in his Hummer. That's all I could think about.
I am so compensating. I'm sorry.
Okay, well, on that note, listen,
All right,
everyone,
that's wrapped.
I hope everyone can make it on Wednesday. It's going to be a lot of fun. And as we say, we got a lot of beers to drink. So please come on by, even as just to say, hello quickly. And then to meet Patrick, myself, Lena, and the real stars of the show, Lena and Luke as well. Luke will be there, right?
Yeah.
Yes.
Yeah.
And,
so-
He'll be
and
there.
yeah, Luke, as well as
Babysitting
some
all
of
of
the,
us.
the rest of the team, Massel's going to make it out.
Oh, that's right. I met Massel for the first time, which is a very nice young guy. And so we're going to meet all the big picture trading folks. And I even have some of my ex trader friends from the desk coming. And it's funny because all the alcoholics definitely said they're in. And I said, don't drink as much, said they'll see if they can come. I thought that was unusual. But anyways, it's going to be a lot of fun. Please come on by. And it's, once again, 22 Front Street West. I almost did it again, Lena.
Yes,
West. It's the bottom line. It's going to be outside, hopefully, unless it's raining, in the courtyard between the two. We're going to pre-order 200 odd beers or whatever that, 200 beers, and we're going to have to drink them, and hopefully we get through them. So come on by.
I don't think that's going to be a problem.
I have a feeling it's going to be gone by 6, but we'll see.
Come get your chest signed by Kevin and Patrick at the
no.
bottom line.
No. No.
All right, have a great weekend, everyone.
You know
I'll
what?
catch you
One
guys
second
next
before
time.
you say that, it's probably, listen, this is like Bay Street. There's a lot of bald dudes like me. It's going to be like people wanting their heads signed. Old
okay,
old
that's
head
even
guys.
better.
That's what I'm going to be like. Okay,
Old head.
old head, like whatever. All right. Anyways, we're looking forward to seeing everyone. Hope you guys can make
Yeah.
it. Take care, everyone. Have a
All
safe
right,
flight back.
Take care.
Patrick. Bye bye.
Thanks. Cheers.